Hey, it's Marco here. So the stock market crash is actually speeding up. So are we doomed or not? Well, let's have a look at what the bond market is actually showing us. And let's have a look, first of all, at the chart. And as you can see, we are in the middle of a massive stock market pullback, not just from, today, but the last few weeks now. And what I wanted to show you is this. The bond market signals concerns that the Fed's bid to cool inflation will backfire. And so this is the kind of thing that I wanted to talk to you about in this video. But let's have a look at why the stock market is so dependent on the bond market. And so the reason why it's so much dependent is very clear, because basically the bond market is very much for basically those who don't want to take any risk. And so what is happening now, there is a lot of fear in the market. And as you know, basically the money is moving from the stock market that has been incredibly speculative over 2021, 2020, and also in 2019, it was quite speculative until we saw the massive crash. And before, again, in 2018, we had a bit of an issue, which can actually be similar to what we saw today. So the reason why we saw this massive basically move, this flattening of the curve, which is the other thing that I wanted to show you in the news, that is the next bit. So the result has been a dramatic flattening of the yield curve. This is the bond market, okay? So that means a narrowing gap between the short and the long dated yield is known. So that is basically what is happening. The money is moving from the stock market, very speculative, no more, into the bond market. So that's flight to security, from risk on, which are stocks, to risk off. And we saw that in crypto as well. So crypto, some people say that crypto is risk off. I believe that crypto is risk on. And yes, so that's what we saw, money from crypto going to the bond market. And so there are reasons why this is happening. The first one is the tension between Russia and Ukraine. And so this is kind of something that I really hope is going to be short term. Obviously, if there is going to be a full-blown war, that could turn into something much bigger. But then there is the other thing, which is what we had to actually be much more worried about. And that is Jerome Powell. So let's have a look at what Jerome Powell, J. Powell, said. And basically that there is going to be a rate hike, but every time he just gives out some kind of new bit of information, an update. So J. Powell assured the financial markets and the American public that it would be humble and nimble as it trained its side on fighting inflation. So it's all about how quickly it will increase the interest rates. And what I wanted to show you then, the reason why we saw this massive flight to safety today is mostly due to the Ukraine and the Russia tensions that there are between these two countries. And mostly another thing that not many people have talked about, and that is incredibly important, I've been repeating that to you every week almost, and if you've been subscribed, you know that we are so much ahead of the curve on this channel. I told you to be very careful in this market if you are investing now, especially if you are investing this year. Maybe, just maybe, invest in commodities. I've got my position in oil that is up over almost 200%. I'm gonna put it in basically on the screen somewhere here, there, and show you that it's very much up. So whoever has joined me on that position, thumbs up. And if you want to subscribe to support the channel. But the other thing, and this is what is really driving the market, and not many people talk about, and not many people give the right amount of attention to this, and I'm literally looking at this day in and day out, like constantly looking at this. So this is the balance sheet of the Fed, and it's really the one thing that is driving the market. Nothing else is as important as this. So as we look at this, we see that this is literally over the last, well, let's see, over the last basically over, it's more about 2 years. So we see that we had this massive spike. That is obviously when we had the massive spike during Corona, but now we see that there is a very light slowing down of the purchase of bonds. So as you can see, we are still buying at an incredible pace, but there is a very slight, let's actually look at the last year, a very slight reduction in speed. And so that is the kind of stuff that really can change absolutely everything. And as you can see from the bond market, the bond yield, the short-term bond is the very first thing that starts being bought so much, because okay, there is this one, the balance sheet, but also there is tension, a war tension, which is something that can cause a massive conflict, not just, you know, in Ukraine, in Russia, but also, you know, potentially if other countries step in to defend Ukraine, to defend the NATO. So we'll see. You know, it's one of those things that can really turn into a massive poop hole, a massive mess. And so, you know, this is why there is this flight to safety. And so what would you do in this market? Well, as I told you, if you are just thinking of investing for the short term, maybe this is a year to sit out. I know that many of my subscribers always think short term. I'm not sure why. But if you're instead thinking long term, really looking at 5 to 10 years, well, in that case, I am pretty sure that you would have to buy, you know, you can start maybe nibbling in some dollar cost averaging in, never hits you, never hurts you. And also very important that you look at buying stocks, buying companies that are profitable, that are really steady, that are really safe. It's not a time to invest in speculative plays. That's what I'm saying. And most importantly is a time to invest in companies that have got a very strong cash flow and a very strong market power because of inflation. Obviously, we want to make sure that these companies can raise their prices, and that way they will take advantage of inflation. And at this time, we probably will have a further pullback. That's the kind of my prediction for the future, and I've been telling you this over the last few months, guys. This is not the first time, and if you've been subscribed to this channel, you would know that already. So well done for subscribing and sticking with me. So this is the kind of play. Otherwise, there is the other play, which is to actually enjoy a yield farming, basically lending your crypto on BlockFi, on Gemini, other platforms like that, and they still give you like 8 to 9% to lend out your crypto. So if you like that, just give it a shot. Otherwise, well guys, thank you for watching, and I'll see you in my next video on the stock market.